what is a family office means and what all different teams you have.
So, a family office, if you go to see, a major role is a wealth management part within a family office, but a family office goes beyond normally a wealth management, wherein it also involves upon what is the specific need of a family.
You have completed CFA.
Yep.
So how CFA helped you in your career?
CFA benefited me a lot in terms of the coverage of CFA is so vast, right? It covers.
Okay, so but suppose there is a startup founder who wants to invest say 50 crore rupees out of India. It can be real estate, it can be a stake of some private company. That also you will help him out to do.
Yes. So we do support in offshore investing as well.
Somebody wants to get into the role of wealth management and to a certain extent your family office. What are the core skill set apart from the technical side? Hello guys, I hope everybody is doing good. Hi, this is Ganesh Nayak. I help finance professionals and students to excel in their career and become a better version of themselves. And as a part of that journey, we have started out with podcast series from getting people from the industry, where they're going to be talking about their experience of working in the industry and what all things are happening with respect to roles and career. So today we have with us Aman, and this podcast is going to be a mix of Hindi and English. Okay, Aman, first of all, thank you very much. Aapne time nikala to coming over here. And for the benefit of the audience, if you can give a brief, what has been your journey in this space and how you ended up being into a family office role.
Thank you so much, Ganesh, for inviting me on the podcast. Firstly, so my journey, if you go to see, has been I started after my CFP course. I started in a financial planning firm, wherein I was greatly involved in helping clients manage their finance, the personal finance, so to say, in a better way. Over there, the knowledge which I gained was more about how do you plan for someone's retirement, how do you plan for someone if they want to buy a house or not, what kind of insurance a client should have, be it life, be it medical, how much coppers the client should have in a fixed deposit, so to say, for the emergency funding requirement and all that sort. So I was there for like good four and a half years in the first stint which I did with the financial planning firm. During that stint, I completed my CFA and FRM level 1. So after doing CFA, I switched and came into a family office domain, wherein the work profile kind of shifted more from personal finance to managing the wealth of the client, wherein over there, having an understanding of different asset classes became important in terms of what's happening within equity, debt, gold as an asset class, what's happening domestically on the macro side, what's happening globally on the macro side. So all that kind of learning came into play in my current role.
Okay. So previously it was, see, you're managing wealth for one person, now it is entire family. And the scale also went up.
Definitely, that's right. That's right. So in the financial planning, it was more of a one family, particularly a middle class family, so to say. But on the family office segment, the client which we manage is probably all the ultra HNI segment.
Okay. Okay. Now, for the benefit of the audience, what is a family office means and what all different teams you have?
Yeah. So a family office, if you go to see, a major role is a wealth management part within a family office, but a family office goes beyond normally a wealth management, wherein it also involves upon what is the specific need of a family, be it managing finance for generational needs, be it managing the tax planning part, be it if they want to do any philanthropy activities, be it if they want to do some succession planning or some estate planning. So it kind of takes care, it's a 360-degree approach, a family office kind of a setup. Within family office, we might have different teams. So one is the front end, which we call the advisory team. I being from the product side of the team, there is ops related team, there is a separate insurance team, there's a separate tax planning team, there's a separate real estate team. So these are the few teams which we have within a family office structure.
So how this is different than a pure wealth management?
So if you go to see a pure wealth management, more often than not, it is product driven. Like a person will try to push a particular product to you without actually trying to find out if there's a need of that particular product in your portfolio. But in a family office, will first understand your requirement first. It will first lay down your charter, and then the products will come in. So the product is not the first thing which comes to you when you work in a family office kind of a setup.
So when you're saying a product, it means the product of the wealth management company itself or say a mutual fund.
Mutual fund being one. So when I say product, I mean the product which comes from the product manufacturer side. So like it can be a mutual fund, it can be a PMS, it can be alternates, it can be anything.
Okay.
It can be private equities, anything.
And you mentioned about charter. So what does the charter mean for the audience?
Charter, so to say, if something as simple as an IPS, which we people in CFA they might resonate with.
Yes.
It is simple like an IPS.
Okay. And in which basically you, before onboarding the client, you understand the client, what is his risk profile, how he wants to invest. You'll write down everything.
That's
And
right. That's right.
basically, you will make decisions of investing for him on the basis of that charter.
That's right. That's
Correct. Okay. Now, being on the product side, what is your role looks like?
Sure. So on the product side, so the one important critical parameter for you is to constantly find product opportunities which is there available in the market. So one thing is there's a lots of product available in the market. So you might end up doing a due del maybe on 10 you might end up liking one, and maybe out of 10 which you like you might end up selecting only one or two from that to actually consider that as a product offering to your client set. So doing a deep dive into the products which is available in the market is a very important aspect. After you have kind of selected a few products, doing a continuous review of this product is also very important. And regularly interacting with the fund managers, what do they think, where are they placing, how are they positioning the portfolio amidst the different macroeconomic changes, understanding what is their view on the markets. Again, it is all a review process and monitoring process which goes on a regular basis with the product manufacturers. Apart from that, you will have to kind of do the portfolio management for a client in terms of what is the good asset allocation for the client, keeping in mind the investment charter, and then regularly kind of monitoring the same in terms of to find out if there is any deviation from the charter, and to find out the reasons for the same. Is the deviation because of the market forces, or is it because a temporary phenomenon which will kind of normalize with time? Let's say we are in an environment wherein the returns are skewed on the positive side. So it is a market due to market forces. It will normalize back to the what is the normal expected return in the longer run.
Okay.
So making the strategic asset allocation for the client is important when we do the asset allocation. Again, if there is some market opportunity and we can take some tactical bets in the client's portfolio, that is something which we would have to do. And again, whenever we are doing the client's portfolio, probably meeting clients along with the advisor is something which we kind of do. After beyond these two, I think so having a hold on the markets is very important. Like what's happening globally in terms of the macro in different asset classes. Are you able to connect the different dots? Let's say if tomorrow Fed cuts rate, what will have an impact? How the equity will be impacted, the debt will be impacted, what will happen to gold? So having a hold on the market is also very important. So I would say being on the product side, you expected to know on the macro side, you expected to communicate effectively to clients, and you expected to regularly interact with the fund managers.
Okay, interesting. Now over here you said the annual review of the charter. So generally after the strategic allocation has been done and the active investing that is happening, so is there a major change that happens in your annual review?
Not really, if you go to see. It is more often than not, it is more on letting the client know what's happening in the overall market, letting the client know that whatever we have done, it is lining with the charter. If at all, if there is an event, let's say right now we are in an interest rate hike environment wherein we feel that the interest rate has peaked and there's a probability of rate cuts to happen. So over here, then your debt portion kind of becomes lucrative in terms of there is a potential to make capital gains over and above your accrual income. So if you want to take some tactical bets, so in the review you can kind of explain to the client why we think this is a good bet to take and why it merits to maybe to put 10% additional in your equity bucket and maybe reduce 10% additional in your debt bucket and maybe reduce it from your equity bucket. So all that sort of things happen. But again, the tactical calls is not very often. It depends upon the market environment.
And you also talked about the return attribution. Like for what is the source of the return?
True.
So is it under the purview of product team, or is it also there's a risk team involved which within the family office they take care of it?
So no, everything lies with the product team out here as well.
Okay, but do you have a separate risk team also?
No, it is we are expected to kind of manage that particular part as
well. Okay, interesting. Now you have completed CFA. So how CFA helped you in your career?
Okay. So I think so CFA benefited me a lot in terms of the coverage of CFA is so vast, right? It covers your different asset classes, equity, your debt,
Right.
what's happening in the fixed income side, your alternates, your portfolio management, helps to understand a little bit on the economic side as well. So all that is kind of laid a very very good base for me in my current role. And then apart from that, CFA is just half the job done, right? After that, what you actually learn on the job is very very important.
Right.
How do you kind of take the initiative to understand what's happening globally is also very very important. CFE will just lay the base, but on top of that, you will have to build on to that. So that really helped me a lot. Let's say 3 years back, I was not knowing anything about what's happening on the global macro side. It's just the initiative which I took, and the CFA being, I was good on the theory, but I knew what were things would happen if a particular event were to kind of pan out. But understanding and reading on the macro side, reading on what's happening globally, it has really helped me.
So somebody who is starting out his career in finance right now and wants to get into this personal finance space, so what should be his strategy of how he can grow his career ideally from your perspective?
Okay. So in the personal finance space, so to say, maybe the qualification side, if you ask me, maybe if a person is very, very fresh, like just completed his BCom and all that stuff, so probably one can try and hand in terms of understanding what products are there in the market. Maybe simple as understanding the mutual fund, so to say. Maybe
Okay.
pick up a fact sheet, one or two, and
Yes.
just track it on a monthly basis. Just you will get to know what are the fund managers actually doing, what is the equity fund managers doing, like what sectors are they investing into, are they trying to reduce the risk from their portfolio, like a small cap fund manager reducing the small cap bucket and getting into large cap because of the valuations, which is there screamingly high. What are the debt fund managers doing? Are they increasing the duration in the portfolio or not? So it's trying to understand and analyze the fact sheets. Maybe in terms of the certification, maybe one can look at clearing the NISM 5A, which is for mutual fund.
Right.
There is something similar to PMS also. So this will give you a good base, and probably after that, if you are inclined towards this personal finance, then probably a CFA would be a very very good option for you to consider.
If somebody wants to get into the role of wealth management and to a certain extent your family office, what are the core skill set apart from the technical side? But that means the certification or basic understanding of different products is one part. Apart from that, what all things are ideally needed?
I think so. The communication, like communicating the knowledge, is very very important, because I've seen people with the technical know-how, especially in the CFA or the FRM side, they somewhere lack on the ability to communicate properly, the ability to communicate their thoughts properly, right?
Okay.
So that is something, because this space requires you to communicate with the fund managers as well as with the client, right? So you should be very well versed with your communication skills. You should be presentable. So all that soft skills is very very critical out here.
Right. You're going to be talking to the decision makers.
Yes.
On both the sides.
Yes. Yes.
At your product
Yes.
product level role. Okay. And in your from your experience, generally what background people come and join family office?
Okay.
Like they are engineers also coming in, or only commerce people?
So usually, more often than not, it is mostly commerce people, because of the interest which they have towards finance. But if someone is willing to kind of shift their background totally from engineering, if they are doing a CFA and MBA, so probably for them also it's a good entry point.
Okay, but MBAs are also there. Masters.
Yes. So an ideal fit, if you ask me, like for the role which I'm into, a CFA combining with an MBA would be a very very good role, right? Because CFA will give you the technical know-how, MBA will teach you like
The soft skill, the sense of dressing, sense of talking to people, basically grooming part.
Yes. So
I think that is where CFA or FRM, these courses slightly lack, because
very true.
It's prepare on your own journey.
Correct.
So,
Correct.
and one more interesting theme, which I was also talking to you before the podcast, was the ESG. So when you're looking at these family people investing, are they looking at ESG? Are they looking at sustainability? Or it's only the pure products that they are looking at?
So no, certain families are inclined towards making like a sustainable investing kind of a thing. But the ESG theme in India, it is very very nascent and still evolving. Because we go to see a company like an ITC, even that is in the top 20 companies in terms of ESG high scores, right? So there is no meaningful way to play out certain an ESG investing theme out of India. But yeah, people are inclined, they want to invest into a clean energy space, they want to invest into an EV space. But again, those opportunities are available on the offshore side, not in India as of now.
Okay, so but suppose there is a startup founder who wants to invest 50 crore rupees out of India. It can be real estate, it can be a stake of some private company. that also you will help him out to do.
Yes. So we do support in offshore investing as well. But the point is, in India, as per the RBI regulation, there is an LRS window which is allowed for all the individuals to take the money out. The limit is 250K, right now,
Okay.
$250K right now per year per PAN you can take out. But there is an evolving theme in the gift city space, which is known as the FIF route, right?
Sorry, 1 second. So 250K is somebody who is an Indian citizen. He can only invest up to 250K
He
in
can take
US.
the money out to 50K, be it for investing purpose, be it for travel purpose, be it for anything.
Okay.
So it is only permitted up to 250K as of today per
Okay.
PAN.
And you were talking about the gift city.
Gift city. So in a gift city is an evolving space wherein there is an FIF kind of a route which is kind of opened up, wherein
Okay.
over there corporates can invest as high as 50% of their net worth and take the money outside. So it is still at a nascent stage, evolving. It's been like 1.5 year that has come into picture, but that gives a good scope for people who want to build a meaningful portfolio outside. And FIF route is good enough.
Interesting. One very different question. Somebody who is a startup founder or a family business with net worth of say 75 crore, what is the incentive he has to come to you rather than setting up his own family office in Dubai or Singapore like that? So how you can differentiate
So
basically?
again, the cost for a single family office, maybe someone who has 75 crores, it will be difficult for him to build a separate research team, a separate team who will do
Okay.
the ops part, a separate tax planning team, right? So when he works with a multi-family office like us, which is Credence, so he can get that the same thing with the expertise of
Yes.
everyone at a much lower cost.
Okay, this is an interesting point. One more thing is that when you're talking to founders or talking to these family offices, people who are in the business, what is one major misconception they have, or what is the one major challenge you have faced while talking to them that you have to educate them or give them idea about
So
product?
normally the family office, more often than not, they would be well versed with the financial terms. They would be financial literate, so to say. There might be few folks who might not have the expertise in finance. So over there, be it a family office setup or be it anywhere in the wealth management industry, there is a lot of knowledge imparting which you have to do from
Right.
your end to the clientele, because the client in India, the clients are not financially literate, so to say, right? They lack the financial literacy. So over there, you have to come and educate about. People still have loads of insurance policies, right? You have to kind of make them understand that insurance is not the right investment. They would have too much of money into FDs, which is leading a cash drag in their portfolio. Have to come and again understand FD. You're kind of making a loss in the real value terms if you consider
Right.
tax and
Inflation.
inflation. So all that kind of comes into play. Be it family office setup or be it any individual who want to invest, it's a journey which they enter into us, and there is a good financial literacy curve which they kind of come
Okay.
up in that journey.
The reason I asked you this question because CFA curriculum also talks about educating the client and also the behavioral aspect of it.
That's very true.
So what challenges, what biasness ideally an investor has.
True.
So you have to deal with that because you have to
Very
inform
true.
and
Very true.
guide
Very
them.
true. So you will be able to do that when you are aware about all the financial aspects of the markets, right? If you are getting swayed away, like if you are someone who does not have the technical know-how, you might get swayed away. And let's say in the last couple of years, market has given 30-40 kind of a return. If you're expecting a similar return from the market, and if you expect communicating the same to the clients, it is kind of a misrepresentation from your end. This is not something which will happen continuously. So you have to be aware that what is the expected return from equity, why is there a market rally happening right now, what is expected to happen in the couple of years when the rate cuts kind of happen,
Right.
is this valuation sustainable? So all that know-how, if you have and if you can communicate to the client in an appropriate way, you will be able to manage the behavioral aspect of the client, which is also a very very important thing in this particular industry.
What is the trend that you see in terms of investments globally, also in India, that is there in the next 3-4 years or 5 years timeline?
So if you go to see in India, people, the wealthy people are genuinely looking for diversification. When I say diversification, the asset class diversification is there in India, but the geographical diversification. Because we go to see India investment opportunity, India is just 4% of the total market, world market cap, right? So 96% of the opportunities are offshore. So investors are generally looking to invest into emerging themes which are promising and which are decadal themes. Themes like artificial intelligence, themes like robotics, themes like biotechnology, themes like an EV or 5G. So all these themes investors cannot participate meaningfully through India because there are not much companies in this space, right? So if you want to invest into these things, you have to go offshore. So that is where you can actually diversify your portfolio. And apart from that, people are also looking for uncorrelated strategies. Like they have been investing into equity and debt. What beyond that? So there is an interesting category called life settlement funds, which is available in the US market. So even that is a totally uncorrelated strategy. Which
What is life settlement for the audience?
So basically, if you go to see people buy insurance policies because they want to safeguard their family dependents, right? But let's say if there is an individual who is 80 odd years and who does not have dependents right now, kids might have moved out because of the nuclear family setup out there, and he still have to pay the future premiums because it is a compulsion out there, right? So a fund house will do, and there might be a case wherein the person is struggling to make his ends meet, right? So a fund house will say you have a policy of let's say 1 million, for example. He will say you transfer your policy rights to me. You take an upfront, let's say a zero point 0.4 or 0.5 million. I will pay the future premiums in case of any happening. In case of death, in this case, the insurance company will pay the fund house.
Fund house, okay.
So if you go to see the returns of this product is not linked to an equity market or a debt market, so to say. It is dependent on something totally different. In a way, this is also helping a social cause. Why I would say that is because you're helping an elderly person, wherein who does not have money right now. A fund is giving some lump sum money so that he can live a good life for the remaining time, whatever he has with himself.
Interesting concept. And right now, is the trend also towards bitcoins or cryptocurrency that people are investing some portion of their money into that?
So investors tend to chase return, so to say. Right? So
Okay.
like wherever there are returns, people would want to chase that. But we as a family office or as a proper advisor, we will have to tell the client, make them aware ki what genuinely is a return generating asset and what is not. So to say Bitcoin might be just rallying because of certain aspects in terms of limited supply and all that stuff. But the technology, so to say, is a blockchain technology, which is really good, right? So you're going to invest in the blockchain technology and not into cryptocurrency, wherein you're just making money because of speculation.
Okay, interesting. And if I look at a normal investor with 50 crore net worth, what would be the general bifurcation between, say, listed equities, then your bonds, and something which is very structured product, or like you talked about the life saver fund, settlement fund. So, what is the general bifurcation that you see?
Again, it will totally depend upon the investment charter because what happens more often than not, people tend to do the asset allocation based on age, which is not true, so to say. Because let's say if a person who is age, let's say 25, for example, a very very young chap wanting to invest, and let's say there is a aged man of age 60 wanting to invest. So probably if you go by the rule of thumb, it would say that 100 minus your age should be into equity. Let's say 25% person ko you gave a 70% allocation and 60% you give 40% allocation to equity. But let's say when you consider one additional data point, which is the time horizon or the objective of investment. Let's say a 60-year-old guy was looking to invest for his grandkid and has a 20-year horizon. The asset allocation completely changes. And let's say a 25-year-old guy was wanting to invest for the next couple of years because he wanted a bike. So in that case, it totally depends upon what exactly is the objective of the client and how actually we frame the charter in terms of if 30% has to be into equity, it should be into equities. When I say equities, more often than not, it is mostly toward listed equities. A small part can go towards the alternate segment, which is private equity. And then probably a 5 to 10% allocation towards the offshore side can be given. Some portion on gold should be given. So all that totally depends. There is no one answer which I can tell you just on the general terms.
Fair enough. With respect to alternative investments, within alternative, where all products that you have seen that people are investing or ultra HNIs are investing right now?
So on the alternate space, people are inclined to invest into the new India kind of a thing, wherein they want to back up the startups ecosystem right now. So the private equity investing has picked up like to a very great extent in the last 5 years or so. So there is attraction which people see. Apart from that, the structured debt is something which is kind of gaining attraction. If you go to see the MFs kind of takes care of your like a high grade credit, so to say, and maybe the AIF, so to say, they kind of do some venture investing kind of a thing, venture debt investing kind of a thing. So there's a lucrative spot which is left in the middle yield, right? So the some of the alternates have recently tried to acquire that mid yield space, wherein you're not increasing the risk to a very, very great extent, but you're getting a very, very high return for that, for the incremental risk which you are taking. So
Okay.
that is something, because you can still take minimal risk, but still earn a double digit return from your debt bucket. So that is something which people kind of look for.
Okay. So investing into startups, investing into uh, also warehouses or real estate is also growing right now in
Yes.
India.
Yes.
Interesting. Wonderful. I mean, this conversation was really good. I don't want to stop it, but
Yeah,
there is a
yeah,
time that we have
yeah.
to follow. But this conversation will definitely help a lot of young people to understand, first of all, that there is a role called family office. What like product team, what exactly they do. Like you mentioned about talking to the founders and talking to
Yeah.
the customer side, the client side, which is the fund managers, and also having that understanding that where my client's money is going in terms of return, in terms of risk.
True.
So I think so that is a very, very interesting role. So CFAs, people who are doing CFP can look forward to enter into that space after moving into some basic experience into wealth management also.
True. True.
Right. So again, thank you very much, Aman, for taking out time
Thank you so much for
and
having
talking
me.
to us.
Thank you.